from the Titagarh Rail Management. Groww, Ishan Bansal, co-founder and CFO at Groww, joining us in just a second from now. Important to take cognizance of what their earnings have been like, and especially the kind of commentary that they had to that they entailed and highlighted in the conference call regarding MTF commodities and how they've managed to aid the ARPU recovery for them. Would be curious to know where it all actually builds up from here. Remember, the MTF is now contributing about 5 to 10% of their cash volumes, and that's something that the market has definitely liked. So would be keen to understand all of that. And of course, starting off with the F&O segment with new STT rates, F&O still structurally lower. Ishan, hi, morning. Was wondering how should we think about the normalized derivatives revenue growth from you?
The way to look at it is basically F&O had a significant change in regulation somewhere in FY25. And hence, if you look at the last year's numbers, our F&O revenue was significantly lower compared to what it is in this quarter. So this quarter has one, obviously, the base effect benefit because the regulation is behind us almost a year now. And the second piece is the amount of volatility that we saw in this quarter led to a significantly higher growth in the F&O piece. But coming to the second part of the question, if you look at structurally, it has, after the regulations, significantly changed the penetration of F&O across our customer base. So earlier, we used to have somewhere around 18% of our customers using equity derivatives. Now that equity derivatives as a segment has been used by roughly 10% of the customers, and that is the new normal. So whatever we see from here, the growth will be similar. Again, we expect that as the industry also grows and the number of customers grows and as the order per user kind of keeps on growing up, there will be a growth in F&O revenue for us, and which will show up in our market share as well, because we have a lot of customers who are relatively young, who have started their journey on investing side also early, and some of them will graduate into doing derivatives, and some of them actually will do more derivatives what they were doing earlier, and hence there will be a continuous growth across multiple vectors.
Right. Hi, Ishan. This is Harsha. How are you penciling in the impact of STT hikes on volumes and your volumes in particular?
So STT, we haven't seen any significant impact as of now. Our understanding is even in the industry, the future has taken some hit on the STT side, but options hasn't taken any hit as of now. But we will yet to kind of see the data for a relatively longer period. It's been just like 15-20 days since this regulation has been implemented where STT has increased. But we expect it not to have a significant impact in the coming quarter as well as in the full year as well.
Right. Equity derivatives in particular, Ishan, now about 55% of your revenue. How is it that you see the mix evolving with MTF, commodities, scaling? And can new products offset the structural decline in F&O monetization?
So structurally, actually, our numbers has been still growing on F&O side. But obviously, MTF being a smaller and the newer business and commodity derivatives also being a relatively a new product, both of them are growing faster. So their contribution is increasing, and hence F&O contribution is actually coming up with the exception of this quarter because of, again, the volatility that we saw because of the Iran war. And I think over time, this number will come below 50%, the contribution of equity derivatives, as the other new products start scaling. Even the wealth piece is generating very low amount of revenue today. But in medium term, we see that that number also start contributing at least like double digit to our revenue. And hence the F&O piece will come off. But that doesn't mean that F&O will degrow. But that means that F&O will probably grow slower than the other products. But it will still keep on growing.
And MTF and commodities, Ishan, seem to be scaling well. What's the target share of revenue from these segments over maybe the next 2 to 3 years? What's the visibility looking like?
So we don't do a target on the share basis, but the way to look at is today my MTF book is somewhere around 2,800 crores, which over time, if you look at this is like 2.7% of overall market, and our fair share today is somewhere around 15%, considering our equity cash ADTO is somewhere around 15% market share. So in longer run, we want it to be more closer to our equity ADTO. So that should happen in next 3 to 4 years. So over time, this number will grow significantly, but obviously the share will depend on how all the other products and their growth performs. So we don't target the share. Target is share is more of output for us. And on the equity derivatives, it is still like 6 months old product. We expect it to grow significantly from here. And on a full year basis, obviously the contribution come in FY27 only, and 28 will have a significantly higher share of commodity derivatives. So it will obviously keep on growing as a percentage. But obviously, in longer run, we don't expect that number to be like very, very large. But MTF can be larger than equity derivatives.
Right. So when does the wealth and the AMC business become meaningful to earnings?
So till now, this is very small. So if you look at on a revenue basis, I think somewhere around 2-3% is getting contributed between both of these segments. But like I talked about, it should become like 10% in few years. That is when obviously it will become profitable as well. AMC as a business is doing well. We have grown 2.5x in last 1 year, and we expect the growth rate to kind of have significantly high growth rate for that business as well. But obviously, this business generate revenue slightly later, and hence profitability is even later. So in longer run, it will become very, very significant, but it'll take some time for that business to become first profitable and then start sharing not only as a percentage of revenue, but also start sharing as a percentage of profits for us.
Okay, and give us the sense with regard to steady state growth, with regard to the growth algorithm in a flat market. What's the steady state growth algorithm?
So in a flat market, there are two variables that kind of typically helps us. One is there is in a flat market, we still keep on gaining market share across users, number of users that are there, and hence there is a growth rate from that perspective. And the second piece is the number of products that we launch, their penetration across our customer segment keeps on increasing, and hence the ARPU keeps on increasing. And the third piece, which we have started seeing recently, is the existing customer doing more and more transactions or more and more AUM with us. Both of these levers also helps us kind of increase revenue. So all three levers are in a state where there's a flat market, we are still growing. But if market grows well, we are able to kind of double down on the customer growth much higher, and hence that adds to another variable for us.
Right. Ishan, such a pleasure having you today on the show. Thank you so much for your time today. That's, of course, the word coming in from Groww on their earnings. That stock holding higher by roughly about 3.5% as we speak. And it's holding out well for the equity markets as well. The broader market has come back to the fore once again after a day's break yesterday. In fact, the Nifty futures are now at 24,500 as we speak. And it's an excellent market breadth as well that you have at your hands. Within the F&O pool, it's a count of 192 standing to the greens, with just about 26 names standing to the declines. The meaningful ones being there, Sammaan Capital, ICICI Pru Life, and SBI Life. But what's happening within the F&O space, we'll dig deeper into that after this very quick break.